Hello viewers and welcome back to Dukascopy TV. I'm Natalie MacDonald. Joining me next in the studio is Chaillet, Chairman of Redwood Capital Group. Marshall, thank you so much for coming in.
My pleasure, my pleasure.
Now, you specialise in researching and managing investments in both small and large cap firms. What benefits do you feel they have over mid caps?
Well, you know, my experience about investing into the financial market in small, medium-sized, large companies, nothing to do against competing medium-sized to small, small to big, big to medium-sized. It's trying to look at the conviction you can have to invest your money. Secondly, to try to put emphasis about the quality of the management. Management is a key. You can have the best management in the world in a dumb company, on a very boring company, and can make a fantastic story. Those whatever can be small, can be medium-sized, can be large company. The investment is based on finding the right company, the right sectors, and the right management.
Now, small cap stocks are inherently more volatile than larger caps due to popularity, volume, etc. How does one avoid that kind of exposure then? Is it simply a case of being sure of what you're investing in, or is there a bit more to it?
Well, it's I think more in relation with what I said before. It's trying to find the right company at the right time for the right portfolio. It's clear that in any economic cycle, small companies are doing better than the big companies at the start of the cycle. After, it could be different, but you can, put your portfolio trying to look at the different opportunities at different time and trying to increase the exposure to small or medium-sized or big company, assuming you can find the same level of conviction. You know, at the end of the day, it's always conviction driven, and trying to find the right company, the right management, and you can make a lot of fortune down the road, and being very long-term oriented.
Would you encourage then an equal split between small and large cap stock investments in order to offset that risk, or how would you balance?
Well, trying to look at making a sort of exposure, it's always on the same sort of question and same sort of answer. It's, if you find the right company, could be a big company, can be, say, Google, could be Nestle, could be whatever. If you feel convinced this company is part of your portfolio, you can build up a big position in all these companies. They are big companies, but at the same time, you can increase the reward or the return by having an exposure to small, medium-sized companies, assuming that you can find the best and the high conviction level type of investment, which is, I think, something which has been motivating my investment and continue to do it, because I'm very long-term. I like the high conviction. I like the company that I understand. This could be sometimes bigger small companies than large companies. I've been working on a big, huge company called Capital Group based in Los Angeles, and we have never been looking top down. We have always been looking bottom up. And bottom up means you put emphasis on the quality of the management of the company you want to have the high conviction about.
And the potential for long-term growth, therefore. Yeah. So who are these companies then that you're seeing as positive for 2014? How's your portfolio shaping
Depending
up?
where you want to.
Well, no, what stocks for you looking
basis,
interesting?
You mean, yeah. No, I've companies like Google, like Apple, like companies Pandora Media in the US, could be companies like Criteo, a French company which has been just making an IPO this year in the US. I find more opportunities in the US than outside of the US. I think the possibility to find the company which can fit your requirement are much larger. The volatility can be also a factor. But I think I can find more companies in the US which are long-term, Facebook, Twitter, all these companies are interesting to look at the long term. The long term is full of development, deployment of social media, of new digital media, of new way to try to transmit, to develop a television station or publishing. If you can find a way to try to put your your fingers into the right sectors, like the 3D printing or some cybersecurity companies, the US market is full of opportunities like that.
Is it simply that the US has a larger pool of talent in terms of, obviously the US is
Sure.
huge and significant,
Sure.
or is it that the Americans have an edge that European companies perhaps
Yeah, completely,
don't?
both. You just put the fingers on the point, which are making a difference. It's, there's a sort of approach to the risk-reward ratio, which is different than in Europe, than in other countries. Some countries try to catch up. It's not easy because you need to have a sort of historical way to try to do the things. You have to get also the possibility of the VC fund of the world or the private equity fund of the world to put the money in place in order to help these companies. And there is a creation because if you take Silicon Valley in the US, they have been attracting the talents from all around the world. Thus you need a lot of point to make a new Silicon Valley emerging. I know there's been Silicon Valley proposal in Moscow, in different places, and it takes time to try to make something, to try to create huge success in the market. Trying to to find a new Facebook, a new Twitter is not easy. Not a new Google is not easy, but many countries try to find a way. But it takes time. It will take more than 10 years.
Marshall, thank you so much for coming in and sharing your insight today. Thank you.
Pleasure.
For more interviews discussing hot financial topics such as this one, stay tuned to Dukascopy TV. Goodbye for now.